Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. On 5th January 2026, when USDJPY was trading close to 156 kind of a level, we suggested that USDJPY is likely to move towards 162 kind of level, and it has almost reached those levels. Now, where it is moving, whether moving back to 158 or 164 plus kind of a level, in today's presentation, we are going to discuss outlook on USDJPY and then finally outlook on Rupee. When we made a view of 162 at that point of time, there were three reasons for the same. First reason was wide interest rate differential between US and Japan, which resulted in carry trade borrowing and money moving out from Japan. Second, negative real interest rate in Japan. And third, fiscal policy by Japan government. These were all the reasons which have allowed us to give a view of 162. Now let us understand what are the factors which will be playing out. Last week, Bank of Japan increased its interest rate by 25 basis point, resulting at highest interest rate since 31 year. Despite that, Japanese yen was trading near 40-year low. Generally, when any central bank goes and increase the interest rate, their currency gets stronger. But Japanese currency was not showing any sign of strength. Let us understand why. They have increased the interest rate, which means that they are curbing liquidity from the market. At the same time, in their statement, they said that they will continue to do a bond purchase of close to 2 trillion yen from April 2027 onwards. It means that by doing that, they are going to pump liquidity in the economy. So tightening reduces the liquidity, and doing a bond purchase is going to increase the liquidity. So basically offsetting each other, as a result of which market did not allow yen to get stronger. Now yen carry trade continues. Why? Still US interest rate differential is close to 2%. That gives investor a chance to borrow cheap in yen and invest in US market as a result, which is going to put pressure on yen, and yen will continue to get weaker. If you see the chart, it is clearly giving us an indication that carry trade is still happening, and in recent time it has picked up drastically. But someone can suggest us that Japan is the country which is having a huge forex reserve close to 1.3 trillion dollar. Why they do not use their dollar reserves to go and protect their currency? But according to IMF rule, if any country wants to keep its currency tagged as free floating, then on a 6-month rolling basis point of time, they can only intervene 3 times. One intervention they have already done. If you see the chart, between 28 April 2026 and 30th April 2026, Bank of Japan intervened strongly by selling close to $74 billion. As a result, the currency got stronger. But if you see the chart, in next couple of months, again USD JPY is currently trading above 160 level. It is suggesting one important aspect, that by intervention you can postpone the trend from weakening. Unless and until you do not do a structural change, the currency will continue to get weaker. Now let us discuss technical outlook on USD JPY. When a central bank goes and increase the interest rate, still the currency is not getting stronger. It gives us a clear signal that the current trend is strong. 158 is going to act as a strong support for USDJPY, and there are higher chances that we are moving towards 164 kind of a level. Once 164 is taken out, then we will have a multi-year breakout in Japanese yen. Probably that is the best time for Indian corporates to go and borrow in yen, where you have interest rate benefit also and currency benefit also. Now let us discuss the outlook on rupee. Rupee is currently at a great sweet spot. Whatever steps RBI has taken, as a result of which we have seen a positive flow in the debt market. The second positive factor for rupee is the crude oil price have corrected drastically, and it has reached almost to a level where it started during the start of the war. That is a big positive for rupee. Because of this positive development, we were able to guide our clients that there are higher probability that rupee is likely to move towards 94 to 93.80 kind of levels, and the pair has almost reached to those levels. Now we are expecting that the pair will consolidate between 93.80 on the lower side to 95 on the higher side. Rising DXY or any negative news from the war front can take the pair towards 94.80 to 95 kind of levels. On the other side, flows in the debt market, ECB flows or FCNR flow will support the pair from getting weaker. So basically, we can say that selling zone for exporter is between 94.65 to 95 kind of levels. Buying zone for importer is between 94.30 to 93.80 kind of levels. With this, I will end my today's presentation. Jai Hind. नमस्कार, फिर मिलेंगे next week. Thank you.